Going on, guys? It's been a couple days, so I have a little bit to talk about today. Nothing really too crazy. Nothing really has changed. Solid day for AMC today, 9% in the green, holding up after hours. SPY has been chopping around. I'm actually going to talk about SPY first today. I'm not going to go too in depth into it, but I just want everyone to know where SPY stands right now and what we're looking for going forward. So with that being said, let's jump into the video. I'm just going to be talking about the symmetry here on SPY. On the daily, Golden Cross happened like 5 months ago. 5 months straight, closing over the 200 EMA, trading in an ascending channel the same way that we saw while the meme basket was squeezing in 2021. All that good stuff. But just on the bottoming action on SPY and now coming up on the other side of this cup here, perfectly symmetrical move, starting with the blue. That's your bottom, your lowest wick there. One break above the ascending triangle right here to retest the macro of the wedge, the descending broadening wedge. I don't have those trend lines drawn in here, but this was a rejection off the top of the wedge. Coming into the red, breaking below that horizontal line at 380 on both sides. On the left, a little bit lower, again to retest the wedge. Come up to 418 on the dot, where you find a rejection. Come down to 380 on the dot, where you find a bounce. You get those 3 touches on 430. The purple circles that you see here. Break over that, you get the cup and handle in the green circle, and then the rest of them move up to 460, the symmetrical equivalent up the top over here. And then now we are in the right shoulder. This is actually an inverse head and shoulders here on a very macro level here on SPY. This would be the head, this would be the left shoulder, and now forming the right shoulder. So from 460, come down, your lowest point coming down from 460, this white square that you see here. The equivalent over here would be this. The bounce up to the yellow square, not as high, but almost to the top of the move, as you see here. And then the final pullback to the green box is what we're in now. Pretty much just establishing support on top of this 444 range right here, this orange dotted line running across here. Establishing support on top of this orange dotted line. When this support confirms, we're going to find a bounce off and start breaking through these upside levels again. The confirmation move I'm looking for is a break above this yellow square here. So once we break above this, the equivalent of this, which roughly is 453, 454 I believe. There's an open gap at like 456 on the daily. So more than likely going to find a rejection there when we do break above that. But yeah, pretty much the point here being that the move is perfectly symmetrical, and SPY is heading for all-time highs. And that's pretty much it, for SPY at least. Now jumping into AMC, macro perspective as always, starting with this. So your January and June squeezes here, the green, the retracement, and then the yellow, the green, the retracement, and then the yellow, the V-shape, and then your macro break here when you actually get into the downtrend. Descending wedge, you have your green, red, and blue, and then your drop to the flat portion where you have 3 touches on the bottom, and then you break out and squeeze from there. In the middle of the retest now, there is also another scenario here where this is actually just the third bottom. Very exaggerated move, and what I mean by third bottom is this right here. The third bottom here, the all-time low, the lower low, and also all-time low of the previous macro. The previous macro ended with all-time lows followed by a squeeze, so it's very possible that is the positioning right now, being at that third bottom. It's also possible we're retesting the breakout here of the descending wedge, and this white line here being 0 on the bottom. So getting into that, the descending broadening, not the broadening wedge, the descending wedge. Now here it is. Again with the halts, I'll really quickly go over this. So halted here in March, halted here in August. Every time you're coming up to this resistance line here, we saw halts. Halted here again. I believe this is March again. 2 more halts here at the top resistance of the bilateral triangle. Again, this bilateral triangle we spent a year in. This is the final iteration of AMC, and then the triangle here broke us out of the wedge, and then again halted here to come down and retest both the triangle and the wedge, and holding up on the retest on the wedge. I'm going to get into that in the micro. But this looks very good, very bullish, and that is pretty much it. I'm pretty much just showing the halts here as confirmation that this is the pattern, the macro pattern on AMC. Every time we came up to this resistance point, we were halted. So just moving on from that, here it is again. I believe this was the next slide down. No, this one is right here. So here it is without the halts now. Just again showing you the pattern here, the descending wedge, your breakout move, and now retesting right here. So zooming in even more, Here it is. And then I mentioned we had a descending trend line, a descending resistance holding us down to the retest of the descending wedge. Here was the breakout move where the descending resistance starts. Your first rejection here, that was that after hours knife that we saw. Your second rejection, multiple rejections here actually, multiple wicks off this trend. Your third rejection right here, this was the first bounce off of the wedge as support, broke below it, and then we got that 17% move off when we reclaimed. So your third rejection right here, and then coming lower, and we finally broke out on Monday actually, and now we're seeing some upside out of that. So this looks very good. The bottom looks like it's in for the short term. I don't think we're coming any lower than this in general, but just short term price action, the bottom should be in. We should be seeing some upside now. Probably a slow, choppy uptrend. I'll get into that in a little bit. But this looks very good. So retesting the macro wedge and broke the descending resistance of the retest here on Monday. So getting into that, and here it is again. Here was that final rejection coming down to the wedge. This was the 4 a.m. candle on Monday, actually rejected right off the resistance. Came down. This is all of Monday's price action here. Spent most of the day, actually, you broke out here and spent most of the day actually just retesting this trend. End of day, you found a bounce off. This was after hours Monday, pretty flat. Tuesday, found some upside. Again, flat after hours. And then today, saw some downside at open, and then just upside from there, 9% in the green, and holding up relatively flat right now after hours. So overall, this looks very nice, looks very good. I'm expecting the bottoms in here for the short term at least, and we should be seeing some upside. As a matter of fact, this does look like it's forming a W pattern here off the retest. I don't know if that's the best view right there. Maybe this is a little bit better. Your first leg of the W, and then your second leg broke the resistance and now curling up. So this looks very nice. Getting into the tracking now, the retest. I've covered this multiple times. I'll do it again really fast. What we're looking at here is this. These yellow squares here. So the breakout retest iteration of the previous macro compared to the current. So getting into that. Here it is. Here's the gap up, the breakout. So this is your breakout. This gap down right here is your retest. This is the confirmation move off. And then from here, you gap up, macro break, straight line to your squeeze from there. So again, gap, you get that crazy wick, gap, you get that crazy wick. The rest of them move to the top, and then you come down to the red, stair step to the blue, come down to the red, stair step to the blue, the uptrend, forming higher lows here. Break below the uptrend, come back up to the top of it, reject, gap down. Over here, same thing. Uptrend, higher lows here, and then that's a little bit old. Here's the updated version. So the uptrend, forming higher lows, break below, come back up to the trend, reject, gap down over here. And then the movement here, again, we were looking for a gap down to this white line here. I've gone over all the reasons why we gapped lower. I'm not going to be doing that again, but the movement is following as it should. The uptrend from the gap down, the uptrend from the gap down, and then the downtrend to a lower low is where we are now. And we also broke the resistance of the retest and now curling to the upside. Very possible the bottom's in here. I'm leaning very strongly towards the bottom's in here. And now we're looking for this slow, choppy uptrend here, followed by the confirmation move, double top, gap up, and then a squeeze from there. That's what we're going to be looking for going forward. And then there's also the other possible scenario where this wouldn't actually be the breakout. Rather, this would be the third bottom, the lower low, and also all-time lows on AMC. Just a very dramatic move to get to that. Again, retesting the pattern, the ape dividend for the conversion meeting at the same price to the penny, triggering stop losses, the all-time low landmark, the lower low landmark, multiple reasons why. But here is the daily chart of the other scenario here where this would actually be the third bottom, the lower low, and the all-time low landmark of the macro. So I've covered this multiple times, and this flat pattern has tracked pretty much perfectly for months. So coming down to your first bottom here, very choppy here. First bottom, and you get this gap up here, which takes you into this double peak triangle type move that you're seeing here. And then over here, same thing, your first bottom, choppy, gap up right there, and then you get this double peak. If it helps, just look at the area underneath the candles. You get this like double peak move that you see here. The second bottom, you come down, you get this move in the yellow, where you reject this line here, this yellow horizontal line, come back up to it, reject it again. That takes you to your second bottom. And then over here, same thing, coming down, you get the same type of move here, rejecting that yellow horizontal line, bounce back up to it, reject it, second bottom. Again, from your second bottom, you're gapping up again here into the tri-peak, where you have 3 pokes above that horizontal line in yellow. 1, 2, 3, 1, 2, 3. Very dragged out here, but still, the tracking is it looks good nonetheless. Took longer to get the third peak of the tri-peak, and a very exaggerated move on the third peak of the tri-peak, but the tracking looks good nonetheless. Another thing here, both your second and third bottoms. So your second bottom right here and your third bottom, you're rejecting this yellow trend here, this horizontal line in yellow. So your first rejection here takes you to your second bottom. You play out the tri-peak, and then again right here, rejecting that yellow horizontal line, taking you to the third bottom, the all-time low, and the lower low. And in the current cycle, the same exact story here, rejecting this yellow horizontal line for your second bottom, you gap up into the tri-peak, and then your third bottom rejecting from this yellow horizontal line, forming a lower low and an all-time low on the macro. Very, very possible this is the correct tracking here, where this would not be the retest, rather the third bottom. And I have a date range pulled from the beginning of the flat portion until your third bottom, 320 days in the previous macro, and in the current 284 days. So pretty much 1-to-1 there, if this is actually the correct tracking. Slightly faster actually, but it looks very good nonetheless. And then just to confirm that, the EMAs look perfect as well. The white line is the 20 EMA, the green line is the 50 EMA, and in both cycles the 20 is starting under the 50. You get that cross, that double cross here, and that middle triangle type move in between your first and second bottoms. And then over here, same thing, 20 starting under the 50. You get that double cross move here under the triangle type move, where your first and second bottoms in between. And then when you cross the 50 to the downside again, coming to your second bottom, as you see here, you start finding upside on the 20 into the tri-peak, where you actually have 2 crosses, 1 and 2. And then over here, same thing, 1 and 2. Again, this was very dragged out to get to the third peak, but coming down here to your second bottom, the 20 crosses the 50 here, and then crosses again here on the second and third peaks. And over here, same thing, second peak and then third peak, cross twice there. And then from that point, the 20 crosses the 50 to the downside again, and actually comes, the lowest that you see the 20 in this range is on the third bottom here. So this is the lowest the 20 came in the previous macro. As you're coming down to your third bottom, the lower low and all-time low. And then over here, same story. The EMAs on the daily were relatively flat here, and then coming lower now. So really what we're looking for now is an uptrend and a break above the 20 EMA. Looking for a break above the 20 EMA. We want some upside here. The previous resistance acting as support now, confirmed. We broke the resistance of this downtrend here for the retest. We broke that as well. 9% move today. Looks like we're going to be seeing some upside. So we're looking for an upside here. It's probably going to be a slow climb. More than likely tomorrow is going to be red, in my opinion. I'm not going to really get into that, the tracking on the micro, but tomorrow looks like we might see a pullback. But yeah, we're looking for a cross of the 20 EMA now on the daily, and then after that we're going to be looking for the 20 EMA, excuse me, the 20 EMA to cross the 50 to the upside. That will be the signal, the first signal, and then the second signal will be crossing this yellow horizontal line here, roughly $48. That is the go signal. So as you see over here, where you're rejecting this line to your second and third bottoms, your macro break actually gaps above that yellow line. So that's what we're going to be looking for on this side in the current macro. And again, the final iteration here is the W with the tri-peak. So W, tri-peak, and a lower leg on the right, and all-time low on the right. And then over here, same thing, W, the tri-peak, and now the lower leg on the right. Very skewed, very dramatic third bottom here, but it's still sound. It's still fractally sound nonetheless. So that's that. Either scenario of tracking, whether we're retesting the breakout or we're actually at the third bottom, the movement that we're looking for going forward is pretty much the same. So when you confirm the retest here, you get this very slow, choppy uptrend, and from the third bottom, you get this very slow, choppy uptrend, and then you get this double top move that you see here, this double top move that you see here, and then both of them, you gap up, and that's your macro break straight line to your squeeze. So regardless of whichever tracking we're looking at, the movement that we want going forward is the same. So it doesn't really matter whichever way you're looking at it. I'm kind of leaning towards this tracking here, where we're actually at the third bottom. But in the same breath, you could also say that this is completely relevant to the breakout retest of the macro. Just saying that this is a very dramatic retest. The tracking, nonetheless, for both scenarios, what we're looking for going forward is the same. And last thing before I end the video here, just the weekly chart of AMC from IPO, just taking a look at OBV and volume. So we'll start with the OBV, which was relatively flat from IPO. And then you start to really take off an OBV in the January squeeze right here, and then the June squeeze, you rocket an OBV again. And then through all this selling here from all-time highs on AMC, which is now roughly $400, all the way down until $7, OBV on the weekly, relatively flat, and has actually broken the downtrend, breakout, and retested twice, and bounced off again for the second retest. So the OBV looks very good. Again, increasing OBV, rising OBV on AMC is a very good indication for upside to come. Every leg up that we've seen on AMC, while it was a meme play at least, the OBV has taken off. And in the current cycle, the current OBV here on the macro, on the weekly, has broken out of the trend, and it is now retesting, actually bounced twice off of it. And then the volume really quick from IPO, very low volume all the way through this, all the way until you get to the flat portion here, where volume starts to pick up. Really starts to pick up towards the end where you break out, and then your January squeeze being all-time high volume. You retrace from the January squeeze, volume cools off, and then pumps back up again for the June. And then from June all the way down, decreasing volume, which just on a macro level, on a micro, macro, whichever way you're looking at this, decreasing volume on a pullback is bullish. It's a good sign. So the volume profile here looks perfect. Increasing volume on the pops that we're seeing, decreasing volume on the pullbacks from all-time highs on AMC all the way to all-time lows. Volume has been decreasing all the way through this, lower and lower peaks on the volume, with green volume outweighing the red, which is why you see OBV is up here, while stock price is all the way down at all-time lows. Green volume is outweighing the red. Very low volume all the way towards the end. The breakout move being here, and now the retest, or third bottom, however you're looking at this. The volume profile right now is matching the levels of volume that we saw during the January and June squeeze. So volume is picking up again, which looks very good. And if you're just looking at this on a macro level, decreasing volume all the way through this until the end, where volume starts to pick up, and then you get your squeeze, and then the current cycle, decreasing volume all the way through this until the end, and now volume is picking up again. So very good sign here. This looks very bullish on OBV and volume. Stock price, you know, people would debate that. I think it's bullish, just fractally, just from a fractal standpoint. And that's pretty much it for the video. I think I covered everything. Tomorrow, I would not expect anything crazy. We do have a channel right now, so that's one thing that I'm not including it in the video. But if you remember me saying multiple times, from the third bottom, there is an ascending channel here. So you have a support, you have a resistance. You are trading in the ascending channel here until you gap up over it, you retest. We do actually have an ascending channel right now. There's only a few days here. So the tracking that I see right now on the micro, it looks like we might be getting a pullback tomorrow, but should be forming higher lows nonetheless. So even if we do get a pullback, as long as we don't form a lower low here, it's good. Forming higher highs and higher lows, having broke out of that downtrend that I covered right here. I could just show it one more time before I end the video. This downtrend from the end of July until Monday. So first rejection, second rejection, multiple wicks here for your third rejection, your fourth rejection, and then on Monday, so from July, the end of July until Monday, we finally broke out of this trend, retested on Monday, and now finding a bounce off some higher highs and higher lows. And on top of that, holding the previous resistance as support. So this looks very good. Not sure if I'm going to be making an update video tomorrow. More than likely I'll be making one on Friday, depending on how the price action goes. And that is pretty much it for the video. I'll catch you guys in the next one.